Is it possible to get good returns in the stock market while avoiding companies that profit from war, human rights abuses, and fossil fuels? And answer it two ways. First, if you want to stick with an S&P 500 index fund, we'll talk about that. And if you're open to going beyond a standard S&P 500 index fund and you're open to thematic funds, so let's start with the second one. There are a number of asset managers who specialize in ethical, responsible, and sustainable investing. And of course, they have to have good returns, otherwise they wouldn't stay in business. So some of the big names are Domini, Calvert, Impax, and Parnassus. And I've owned a couple of Parnassus funds for a number of years, maybe even a couple of decades now. Those are all really great options that will provide you great returns. If you are open to something like thematic investing, where you look at ETFs focus on a specific theme. So this could be technology, you may have heard of QQQ. This could be healthcare, health tech, water, solar energy, wind energy, whatever it is. I've owned a water ETF. FIW, I believe it is, for a few years now, and that has performed incredibly well. I also have owned a healthcare or health tech fund for many years, maybe even a decade or more, and that has performed incredibly well as well. So let me give you one more example. So check out this mutual fund from Morgan Stanley. Let me double check with this. MSEGX. Okay. If you look at this, you can see its ratings here are pretty awesome across the board except for this one category. But at least you know with this one that you're avoiding all of these things that contribute to human rights abuses and fossil fuels and all these things. So you're avoiding all of that. Then let's look at their returns. Those are pretty awesome returns. And if we look at this screen, this is another way to parse it. It's provided 92% cumulative returns in the last 3 years. Your S&P 500 index fund can't do that. It hasn't done that. So yeah, this is just to say if you're willing to go outside of the S&P index fund, you can definitely make good money. I'm specifically interested in sticking with an S&P 500 index fund. The S&P 500 index, that means we have to have a certain amount of similarities to track this index, which means we're limited to the number of companies and the variation of those companies. But that being said, there are many variations on S&P 500 index funds. So one example I like to give is the Sphere Fund. This is ticker SPFFX. And you can see here that it has a very low fee, and it has overall a pretty good rating, much better rating than VTI or VTSAX or any of these traditional S&P 500 index funds. But yet when we look down here and we compare it to just the across the board index for the S&P 500, we can see that this fund has not only met the same performance as the S&P 500 index, it's actually beat it by 0.34% per year for the last 3 years. So yes, that means this Sphere Fund, even avoiding all of these things that are involved in human rights abuses, war, and fossil fuels, it has actually outperformed the S&P 500 index. So yes, you can make money, you can grow your money in the stock market while avoiding things that make you cringe or hurt your heart. I have a longer training on all of this and where I teach you how to do all this research on your own and to find all of these things yourself. This is not investing advice. I am not your financial advisor. I'm not a registered investment advisor. This is purely for informational purposes only. Always do your own research.